It's the midweek edition of Business Morning. Thank you for joining us. I'm Chimezie Obi Iwagu. We begin with a global oil market update as oil prices fell today, ending a multi-day streak of gains as investors focused on oversupply risks after U.S. crude inventories rose more than expected amid a slump in demand caused by restrictions to halt the coronavirus spread. U.S. West Texas Intermediate crude futures fell as much as 2.1% to $24.05 a barrel and were down 14 cents at $24.41 a barrel in early trade. WTI has snapped a 5-day winning streak. Brent crude futures were flat at $30.97 a barrel. Brent prices climbed 13.9% in the previous session, part of a 6-day rise. Investors may be hesitant to increase their purchases of Brent as the contract has climbed too much over the past streak. Brent's Relative Strength Index, a technical measure used to track the futures trading momentum, was at 72.93 on Wednesday, indicating it is overbought after the recent gains. WTI also slipped after a report showed U.S. crude inventories rose 8.4 million barrels last week, more than expected, according to data from the American Petroleum Institute. On oil prices had gained recently as European and Asian countries had ended their lockdowns to halt the coronavirus spread and as producers had cut supply after the demand crunch. But analysts cautioned the rebalancing of the market would be choppy. And the federal government is amending its 2020 budget to assume an oil price of $20 per barrel. This is according to the Finance Minister Zainab Ahmed, who spoke in a web conference after about the impact of low oil prices on the country. She also said Nigerian oil and gas projects will be delivered much later than originally planned due to upstream budget cuts. Nigeria's economy, which emerged from a recession in 2017, was already contending with low growth of around 2% before oil prices plummeted. Africa's top oil exporter relies on crude sales for around 90% of foreign exchange earnings and more than half of government revenue. Global crude oil prices have plummeted in the last few months. In March, the finance minister said the budget will be cut and the initial assumed oil price of $57 per barrel would be reduced to $30. Now, Nigeria's economy has been battered by low oil prices following a dispute between Russia and Saudi Arabia, as well as the impact of the new coronavirus pandemic. Well, the National Insurance Commission looks to review the sectoral recapitalization guidelines for insurance companies. This is due to the implications of the COVID-19 pandemic on the exercise, which had a deadline of December 31, 2020. But beyond the recapitalization plans, there are other matters arising, including the provision of free life insurance cover with a sum worth 11 billion naira to 5,000 health workers in the country, forbearance for insurance companies, and of course the new direction for the commission under the substantive Insurance Commissioner, Mr. Sunday Thomas, who joins us now from our Abuja studio to shed light on all of these developments. Thank you very much for joining us, Mr. Thomas. Congratulations on the confirmation of your appointment as the substantive Chief Executive Officer of NICOM. So, how overwhelming is it for the insurance sector as COVID-19 ravages the economy?
Sorry.
All right, well, we'll try to get Mr. Sunday connected there. The Lagos Chamber of Commerce and Industry is asking for a 1-year tax break for healthcare and pharmaceutical companies, airlines, manufacturers, agro-processors, SMEs, and hospitality players to avoid job losses and shutdown of businesses. At a briefing in Lagos, the president of the chamber, Mrs. Toki Mabogunje, said findings show that the impact of COVID-19 lockdown on businesses will result in massive cut in salaries and downsize in workforce. She explained that certain policy measures need to be adopted by the government and the organized private sector to rescue the economy from collapse.
Our propositions to the government are informed by the findings from our recently conducted survey on the impact of COVID-19 lockdown on businesses, as well as interaction with major stakeholders in the private sector. The findings showed that demand has reduced significantly with revenue severely affected. Majority, that is 83%, of business owners plan to cut down on salaries, downsize their workforce, or a combination of both. Businesses therefore request adequate stimulus and intervention to preserve investment and save jobs. More than half, that is 54%, of the business owners want the banks to reduce interest rates and give moratorium on loans. 29% want reduction on tax liabilities, while 17% want waivers on import duties and demurrage. In the light of the foregoing, therefore, policymakers and the organized private sector need to come together to rescue the economy from collapse at this critical time. Recognizing the role of businesses and investment in the economy, it is imperative to have an urgent rescue package that would enable businesses to navigate the storms as well as preserve employment. We therefore propose the following support measures for the business community for consideration. A year's tax break for healthcare and pharmaceutical companies, airlines, manufacturers, agro-processors, SMEs, and hospitality players. Temporary suspension of 50% increase in the VAT rate till the year end. Also, payee should be suspended for the next 6 months. This would help to boost purchasing power and aggregate demand, thereby stimulating the economy. Agro-processing companies should enjoy import waivers for the next 1 year. This is critical to support food security and agricultural supplies. Commercial banks are implored to offer reprieve to businesses and corporates who are indebted to them. The reprieve could be in the form of loan moratorium or restructuring. We urge the CBN to review the cash reserve ratio downwards to 20% from the current 27.5%. to enable the commercial banks to have more liquidity to support businesses. In the aviation industry, we recommend support towards augmenting insurance premiums, which are dollar-denominated, as covers were mostly underwritten abroad due to the lack of local capacity. Support to pay for operational costs, including international lease rental on grounded aircraft and maintenance.
All right, we have Mr. Sunday Thomas back with us. Thank you for sticking out there. Congratulations again on your confirmation of your appointment. Now, how overwhelming is it for the insurance sector as COVID-19 ravages the economy?
Well, for us, we prepare ahead of time. COVID-19 has come, but what is left for us is to find ways and means of dealing with the effect. For the insurance sector, the consequences are quite massive, both from distribution of products, packaging of products, managing of products, and even the clients or the customers of the insurance sector. So from end to end, the effect of COVID-19 is quite vivid.
Now, yesterday you announced plans to review guidelines for the ongoing recapitalization exercise in the sector. What are the plans?
Well, for us, with the effects throughout the entire sector of the insurance sector, we intend to review the recapitalization program to align with the realities of the day. The details are being worked out. We are not totally out of it, so it might be too early for us to now conclusively tell you the plans that we have for the recapitalization exercise.
Now, in view of the recapitalization exercise, some of the insurance companies, more of the listed ones, have already reached an agreement with private equity investors, i.e. the likes of Royal Exchange PLC, Law Union and ROCs, and a host of others. How will the new guidelines redefine such agreements?
Well, for us, it is even better if you get there early than it has been or it will be stated. The fact is that the recapitalization in terms of the time frame that has been allowed may have to be restructured. For those, I will congratulate those who are close to concluding their exercise, either by way of consolidation or by way of injection of fresh funds. So for those that that you did mention, I think it's just to the advantage.
Now, the industry has supported the federal government by providing 11 billion naira life insurance cover to the frontline health workers employed in the fight against COVID-19. What are the details of this? Who gets what, and what period does it cover?
Well, for us as an industry, first and foremost, we want to thank His Excellency, President Muhammadu Buhari, for the acknowledgement of the efforts of the insurance sector. I will tell you that this is the very first time that we will enjoy such a mention. For us, we believe that having to protect those who are in the front line of the fight against COVID-19 is very core, and it's also very important for us. Therefore, we looked at the structure of those that are fighting COVID-19, the medical team, and we have now segmented the benefits in line with the different functions within the fight. As for the details, the Office of the Chairman Presidential Task Force is working the details with respect to states and who gets what.
Well, the Commission gave a regulatory forbearance to insurance companies as a result of this COVID-19. Did you consider the implications for operators?
Well, of course, first and foremost, it is in due consideration of the effect of COVID-19 starting from the lockdown and the inability to function in a normal capacity that we came out with some regulatory forbearance. We knew very much that some actions will be delayed because of the restrictions in movement. And therefore, we said, whatever you do, we give guidelines as to how to ride through this tide. And whatever you do within this period, we allow you what we call file and use. Just inform us of what you're doing, then we will be looking at it while your business is not unduly restricted. So for us, I think it's a way to go. And again, I will quickly add, those things we pull out of, we have to activate our business continuity plan to make sure that policyholders are not put at a total disadvantage. New businesses will continue to come in wherever they can come in. Renewal businesses can continue to be renewed. And also for the operators, there are those who have to renew their certificates. We give them the forbearance for them to continue in operations while the process will continue thereafter.
And we have also seen a new wave of initiatives from operators lately coming from some of your big players like WAPIC Insurance and Leadway, refunding policyholders on motor insurance premiums. Are these developments regulatory induced?
Well, of course, I would not say it's regulatory induced, but regulatory confirmation. It's important that we bear each other's burden at this time. Of course, for some of these operators, we want to thank them for taking the initiative. But much more than you have mentioned, there are other initiatives by other operators assisting the states by helping them to provide the needed cover for their frontline workers that will leverage the existing compulsory group life cover as contained in the Pension Reform Act 2014. We just believe and hope that the various state governments will leverage the help of the sector to imbibe the culture of insurance throughout their operations. It's important, it's key. What we have gone through in the last 2 months have shown clearly that insurance is very key to businesses, is very key to life, and is very key in maintaining the workforce.
And lately, we've also seen more insurance companies rolling out products tailored towards agriculture. Tell us about regulatory end of this bargain.
Well, I mean, one thing we must appreciate is the fact that agriculture has remained the mainstay. And the more we dig deep into providing necessary services that will support the government initiative in agriculture, the more we'll be able to reap from the benefit of the comparative advantage that we have in this area. To a large extent, we have continued to encourage operators to go to protect, to grant necessary protection for our agri sector. We've been working with NARSA. We've had a lot of training arrangements for operators, which we had conducted in the past, and we are still doing. And much more than that, we want to encourage the operators to go into the area of agriculture. From end to end, provide the necessary cover. Let there be comfort when they are busy venturing into different areas of agriculture.
And what's the latest on microinsurance products rollout?
Well, the microinsurance, if there's any time that microinsurance is relevant to our economy, no other time than now. Of course, those that are low in the pyramid needs to be catered for. And that, we have, of course, we had the first guideline, which we structured 2 years ago. And we are, of course, due to the dictate of the time in which we are rejigging the guideline for microinsurance in terms of the authorization of operators and the process by which the consumers at that lower end will be able to enjoy the benefit of insurance. We are looking at the capital structure of microinsurance business, and we are looking at the areas that we can be more functional in providing microinsurance services to the public. For us as the regulators, we are to lay the framework and allow operators to operate freely in that arena.
Your administration is coming at a time that the economy is highly challenged. Give us a sense of how your strategic programs for the insurance market and how it will deepen the penetration of markets.
I think largely in a challenging time like this, that is when insurance, people should appreciate the place of insurance in managing the assets that are existing. Of course, in times of abundance, people can easily replace assets when they are lost. I'm talking of physical assets now. So if there's any time that, that insurance should grow, it's now. People should appreciate the benefit of insurance. I mean, you can imagine if any company had put in place as a rider to a property insurance, what you call business interruption. All this that happened during this lockdown, inability to go to work, loss of profit, will have been taken care of by insurance. And of course, again, looking at the life bit of it, we now appreciate the fact that providing what insurance sector has done by providing cover, assisting the federal government, providing cover for frontline workers, is also part of the things that we help the economy regain its quick restoration. I'm quite confident. And let me also say quickly, yes, we are in a hard time right now, but I can tell you, I've had economists projecting and postulating good. I mean, they are good for guidance. But I can tell you, it may not be last as long as we think. The economy will structure itself by some of the things that's happening. Nobody knew that this was going to happen at the beginning of the year. It has come, and it's not likely that people will know what will happen going forward. A lot of things are in stock. This country is a privileged country, I would say. We have a way of picking it from the ashes and getting our restoration as quickly as possible. The penetration that we have in the market is a challenge, but of course, it's also an opportunity for growth. So what we have to do is to see how much some of the things that have been in the offing There are some of the products we must leverage on technology at this point. I mean, it's clear now that we must leverage on technology, either as operator or as regulator. So be able to provide the necessary facilities in terms of products and be able to effectively have a surveillance over the sector that we regulate.
All right. Thank you very much for your time, Mr. Sunday Thomas.
Thank you very much.
Commissioner.
Yeah, I appreciate it. Thanks for having me.
Right. We take a break now, and when we come back, small business owners call for more stimulus package to stay afloat. To stay with us.